Good morning.
Good morning, Rochelle. Good to see you.
Good to see you as well. How are you?
All right, given everything that's going on in the world. I'm doing better now that I get a look at your lovely face.
Oh, that's so sweet. Thank you very much. I appreciate that. I'll have to send you a picture because you won't be seeing my lovely face in the normal places anymore.
I know, I'm disappointed about that, to say the least.
Absolutely. So may I ask you to tell us your name and share anything with us will help us get to know you a little bit better, please?
Sure, my name is Lee Reiners, and I am the Executive Director of the Global Financial Market Center at Duke Law, as well as a lecturing fellow at the law school. And I live in Durham, North Carolina, with my lovely and much smarter wife, Dr. Kate Meyer.
Absolutely. And before you came to Duke, what did you do before Duke? Where did you go to school? What was your career before you became a lecturing fellow in charge of the global financial markets?
Sure. So immediately before I came to work at Duke Law, I worked for 5 years for the Federal Reserve Bank of New York. So I was living in New York. And most of that time at the New York Fed was spent doing large bank supervision. So actually every day, every day other than Monday, I was going on site to the specific bank that I was overseeing at the time. So these were the larger, Wall Street financial institutions. And that's a bit unique when you're sort of working out of the premises of the institution you're supervising. But then towards the tail end of my time at the New York Fed, I also had the opportunity to leave the supervision group and go work in the executive office. And it was basically a chief of staff type of role. So doing a lot of policy coordination with international standard setting bodies. So these are groups like the Financial Stability Board and the Basel Committee on Banking Supervision. So groups that sort of bring supervisors from around the world together to develop common standards. And then also doing some policy coordination with other domestic regulatory agencies, principally the Financial Stability Oversight Council, which was created in the wake of Dodd-Frank to kind of bring all the regulatory agencies together and think critically about the biggest risks that are threatening the health of our financial system. So it was a great experience. I say, like, when you're a supervisor, when you're a bank examiner like I was, you're kind of on the receiving end of the sausage factory, right? Like the rules come to you,
right,
fully baked, and then you just have to make sure the banks follow them.
Right.
And then when my last role at the New York Fed, I was like at the beginning stages where it's like really kind of bouncing ideas off of your fellow global regulators and trying to develop standards, and then take those standards and then implement them in your own country, which is a process unto itself. So that was my time at the New York Fed. Originally, I'm from Minnesota. I'm from a small town in Minnesota called Hastings. I joined the Minnesota Army National Guard when I was 18 years old, actually, senior in high school. Shortly thereafter, my unit was activated. I was deployed. I served a year overseas in Iraq. I came back, enrolled at the University of St. Thomas, which is in St. Paul, Minnesota. It's a small Catholic university there. Went to school there and then graduated and came to Duke and got my master's in public policy. And then from there, I went to New York to work for the New York Fed.
Okay. So let me ask you this. There's a lot of confusion about regulatory agencies and how they manage banks and things. So, Aaron Klein did a chat with me. He was talking about some of the systems that are set against low wage, low skilled people. But can you tell us exactly what the securities regulations are and why do they matter? Why do we need these types of policies and regulations and guidelines?
Well, that's a big question, and I guess let me start with the latter, which is why does this matter? And to that I'll say, well, look what happens when we get it wrong. Right. And so an example when we got it wrong was 2008, right? When the financial system completely collapsed of its own doing, I might add, and required extraordinary actions on behalf of the government and by extension the taxpayers to stem the bleeding. But the human toll of that crisis was immense. I mean, it's been since dwarfed by the current crisis that we're living through. But still, I mean, you had over, around 9 million people lost their jobs. Many of them who remain unemployed or out of the workforce for, years, thereafter. Um, and it took us a long time. I mean, in some, many, cases, we weren't, sort of fully, out of the damage that the last crisis had done to us before we reached the current pandemic. So, so that was, just immense human suffering. And it ultimately resulted from, it arose because of, many reasons, but an inadequate regulatory framework, right? And in some cases, regulators who were asleep at the switch. So, that's why it matters. I mean, I think, when you live in this world like I do on a day-to-day basis, it does feel sort of arcane. I think certainly people who kind of, periodically, visit our world think, man, this is just a bunch of nerdy, um, you know, nerdy
Number
technical,
guys.
yeah, nerdy technical stuff. Um, I think yes. So when you look at it on, sort of on an isolated kind of lens, it certainly is, but ultimately it adds up to making sure we have a financial system that is run well, that doesn't threaten to bring down the rest of the economy and doesn't harm the least among us. And if we get that right, then we all benefit. Um, and if we get it wrong, then we all lose, and we know what that's like. So that's kind of why it matters. In terms of how it's actually regulated, I mean, that's complex, and I think beyond the scope of what we have on our agenda today. But um, I will say that I think, if anyone was designing a regulatory system from scratch right now, they would not design the system we have in place in the U.S. It's certainly a patch. The term people use a lot is patchwork quilt. Um, it's a byproduct of, historical events, the Great Depression, the Civil War, in the case of the Office of the Comptroller of the Currency. Politics plays a large role. Some of these agencies are overseen by different committees within Congress, and naturally, no one committee wants to give up their jurisdiction over a given agency, because guess what? The financial sector has a lot of wealthy people and institutions that that donate to politicians. So, so that kind of keeps things fragmented. So, it's not an ideal system by any stretch of the imagination, but it's the one we have, and we need to make it work for all Americans.
Absolutely. So, one of the things that you have recently done was work in FinTech, and can you talk to us about what FinTech is and where do you see that going, and what's its impact on, I would say, underrepresented communities?
Yeah, I mean, I would say that that's one of the more exciting things about FinTech, and why, so many people are interested in this field, from policymakers to community advocates to the financial industry itself, is that they see FinTech as holding out the potential to promote and improve financial inclusion. In terms of what FinTech is, I mean, obviously it's financial technology, so it's the application of new technology to the provision of financial services. And of course, using that definition, right? I mean, technically FinTech has been with us for a long time. It's not as if, the financial industry has, not been using or adopting or creating new technologies, since the financial industry has existed. But what's different, I guess, this time around is kind of who is doing the innovation. And it's really occurring largely outside of the traditional banking sector. So, new tech firms that are starting to offer financial services. And I think in the early days of just the modern FinTech movement, which emerged in the wake of the financial crisis, there was very much this Silicon Valley mentality of disrupt. We're going to disrupt banking, just like Uber disrupt, transportation, and Airbnb disrupt lodging. And that sort of idealism, quickly gave way to the hard reality that financial services is heavily regulated. and that it's simply just not possible to to follow the Uber model, which is just essentially to ignore all the rules and do what you want. um, and so that doesn't work, and so that disrupt mentality kind of quickly gave way to the, okay, well, how do we partner with the traditional financial system, whether it be through providing services, or in some, many cases, is being bought by large firms. Um, so I think that as we sit here today, fintech is occurring, outside the regulated financial sector. It's also occurring within the large banks, as well. And yeah, I mean, and so like I said, one of the exciting aspects of it is that it holds the potential to make financial services cheaper.
Mhm.
And I use the word potential carefully. I mean, that was a deliberate, because to me, at least, it's not, the data is still unclear as to whether or not that is in fact happening. And I think certainly on behalf of the financial sector, they like to use that word quite a bit, inclusion, because it's more appealing, right? But when you peel back the data, I just think it's premature to come to any sort of definitive conclusions. I mean, certainly, like, things like Bitcoin or cryptocurrency. I mean, I don't see how you can make an argument that that's somehow helping the
Right,
unbanked or underbanked.
right,
Um, there are, new, fintech lending platforms, online lenders. You can apply for a loan on your phone, whatever like that. But when you look at that data, I mean, by and large, the people who are doing that are people who already have access to financial services and are just using these new lenders to consolidate, credit card debt or whatever it may be. I think the real potential to promote financial inclusion and help the unbanked, underbanked is in the payments realm, and that's something that I know Aaron Klein has spoken to you about, and his work on this is just truly outstanding. And the reality is that in this country, at least, it is expensive to be poor,
it is very expensive to be.
and the poor, on a proportional basis, spend more for financial services.
Right.
The poor do not have access to credit cards with generous, rewards points or airline miles or all that. Um, and that has an impact. It takes time for checks to clear, your payments to clear. As the saying goes, they got a lot of poor folks have too much month in the end of the paycheck,
Amen.
and so that has significant economic costs. And then you look at remittances, for instance. So folks working in the U.S. Sending money back home to their family in Mexico or the Philippines, wherever it may be.
Mm-hmm.
Well, the World Bank says it costs for a $200 remittance, you're paying about $14 in fees,
Right.
which is astounding when you think about it. So there are some really fascinating things going on in the payments realm outside of cryptocurrency that I think can bring those fees down. But it's still too early to say definitively that yes, fintech as a whole, and honestly, I don't really, I think fintech encompasses so many different segments of the financial market that it's no longer a particularly useful term to use. But that said, I think it's too early to say fintech as a whole is following through on its promise to promote financial inclusion. But it's still early days.
Yeah. So just to acknowledge, you did a Coursera course on fintech.
Yes,
And
fintech law and policy. Google it.
I completed the course.
And I have to give you credit, Rochelle, because you were the one who planted the seed in my head to do it. If it weren't for you, I would not have even thought of doing a Coursera course. So I have to give you all the credit in the world for that. And it's been a great success.
Absolutely.
And certainly since the pandemic, I can tell people are looking for stuff to do because the people enrolled in the Coursera course have skyrocketed. But the Coursera course is FinTech Law and Policy, and I designed the course for not necessarily for lawyers, although certainly I think anyone who can take it and find it valuable, but it's more so for the technologists who are very familiar with the technology and understand the technology, but they don't know how it fits within existing regulatory structures and how this stuff is treated, in the law and regulation. So that's who the target audience is, and I think based upon the comments and the feedback I've received, it's meeting its mark. So
I will say
thank you.
when I took the course, I absolutely learned so much. It was just one of the, I think I've taken like 5 or 6 Coursera courses, and it's probably one of my favorites because it
Oh,
was
thank
just
you.
really a review of how, these technologies are coming and what they may mean to other technologies that are posed to disrupt, the workforce, education and all those other things. So actually having that foundation was really, really helpful. So that was a great, great course. So thank you for that. It's great. So the other great thing that you did is you worked with former Governor Raskin and some other folks and some students, and you all did this booklet on how cyber attacks hurt me. Can you talk about that a little bit?
Yeah, so that was part of Duke University's Bass Connections project, and Bass Connections is just a great program. And what it is, it's academic year-long, student-led interdisciplinary research projects. So there's, traditionally a couple faculty that are, the leads. There's an application process. Students from across the campus, including graduate students, apply to be a part of these teams. Teams generally are 10 to 15 or so students, and then they work on a project or attempt to answer a question that crosses academic disciplines. And so the project you referenced was How Do Cyber Attacks Hurt Me? It was the brainchild of Sarah Bloom Raskin, who was the former Deputy Treasury Secretary, so #2 at the Treasury Department. Prior to that, she was a Federal Reserve Board governor.
Mhm.
And actually, the announcement just came out today. I don't know if you saw in the Duke Law Daily, and it's online, that she is now going to be a visiting professor of the practice here at the law school for the next year, as well as a distinguished fellow with us at the Global Financial Market Center. So we're thrilled to have her continue to work with us. She's absolutely brilliant. She's very engaging. When you talk with her, you would have no idea that she was, this former bigwig,
Yeah,
in the government. And I think she's really, putting pressure on financial policymakers to think about how their decisions impact the least among us. And I think that's a refreshing and needed viewpoint right now.
absolutely.
Um, so anyway, yeah. So basically, this project was designed to kind of teach people around, like, we read all these stories about cyber attacks and, Equifax and, OPM, Office Personnel Management, all this stuff, and, the hacks and whatnot. And, a lot of us, I think, you might have thrown this term at us, but it's breach fatigue, is a term that's used. And we don't really, we just kind of read it and just move on. We don't really know, like, what does this actually mean for us? Like, how does this impact us?
Right.
And so the team tried to tackle that question and ultimately developed a list of recommendations for what individuals can personally do to kind of help protect their cybersecurity. And it's a really user-friendly format. There's a physical booklet. There's also a website. I'm drawing a blank on that. It's like, How Do Cyber Attacks Hurt Me
And
at Duke?
families. Hold on, just
Okay,
one.
we should know this, and it's
No,
embarrassing that we don't know this.
it's called old age. Hold on a second. Let me go.
Well, I can't use that excuse.
So the booklet is called Cyber Security for American Families, but the Bass Connection was called How Cyber Attacks Hurt Me.
Okay, what's
Yeah.
the URL for the website? It's in
Uh,
there. It's in the booklet somewhere.
so this is so in the back it says sites at Duke.edu/10 steps. Can
Oh,
you?
there you go. Sites.duke.edu/10 steps. So it's 10 simple steps that anyone can follow. There's a booklet. There's an online version. The online version has some actual videos of folks talking about what their experience was like when when their personal information was stolen online. And so, yeah, it was a great team. We were fortunate to have you be a part of it as well and advise us. And then I've actually, since that, been part of another Bass Connections team that is ongoing. So we did we started last year. We had a great team of students last year, and then We have another incoming team of students in a few weeks. And the product is called American Predatory Lending. You can check it out at predatorylending.duke.edu. And really what it's about is trying to understand what was going on at the state level in terms of the mortgage market leading up to the 2008 financial crisis, because so much of what we know about that crisis has thus far been told from a DC and New York centric viewpoint.
Mhm.
But less has been told about what was going on the ground at the states and local communities.
Right.
And so that's what this project is all about, and trying to establish a primary source record of that state perspective. We started in North Carolina last year. This year we're going to be branching out, but it's really cool. We got data analysis on there, and then what I think is the coolest part is we have an archive of oral history interviews. So we're going out and conducting oral history interviews of former state policymakers, former consumer and community advocates, and then financial industry professionals. So go check it out, predatorylending.duke.edu. I mean, we have one story of a woman here in Durham, Stella Adams, who's a community advocate. She went on a 30-day hunger strike to protest, I think it was Citigroup's predatory lending practices here in North Carolina. So, these are stories that aren't captured in, official congressional reports of, what was going on. But North Carolina is unique for a lot of regards, and there's a very rich history here of community activism when it comes to financial services, and so it's been really neat to capture those stories.
Great. We will make sure we put that on this when I post this video, so it will be out there and link to that. So I want to ask you a question. This is supposed to be a diversity chat, and I know we've kind of been all over the board, but I want to ask you a question. So what we know from various records and books and people have written about Black Wall Street, right? So you had the one in Tulsa, Oklahoma, and you had Black Wall Street here in Durham. I think those were the primary two, but there have been, others as well. So first of all, can you describe why an institution like a Black Wall Street is needed, and what did it serve that the traditional banking systems did not serve, or traditional financial vehicles did not serve?
Sure. Well, I mean, Black Wall Street was needed to combat discrimination and racism, plain and simple. For a long time in this country, and unfortunately to this day, African Americans and other people of color not access financial services. And having a bank account, having access to a savings vehicle, being able to get a loan to invest in a business or to purchase a house is critical to financial well-being and combating generational poverty. I mean, it's one of the reasons that the average white family has 10 times the wealth of the average Black family is access to financial services. And so I think, as you said, the Black Wall Streets in Tulsa and Durham and elsewhere. I mean, there's multiple Black Wall Streets. So they weren't all. It's not like a monolith. I mean, the firms that were part of those, localized communities, did different things. But generally speaking, each one of those Black Wall Streets had a financial services component to it. And so, Durham's, it really started with North Carolina Mutual.
Right.
And so North Carolina Mutual was, it's 115 years old. I mean, it's around there. I mean, it's north of 100, well north of 100 years old. There's the building. It's not the original building, of course, but there's still the building there on Main Street. And that was a Black-owned life insurance company, and I think they did more than just life insurance at the time when they were founded. And so that was a chance for African Americans in Durham and the surrounding area here to get insurance, which is also critical to financial health. Out of North Carolina Mutual, some of the folks responsible for North Carolina Mutual then stood up a bank called Mechanics and Farmers Bank, and it's now goes by the name of M&F Bank. And Mechanics and Farmers Bank is 100 years old, and I know this because, or 108 years old, I'm sorry. I know this because our center just hosted a conversation with the CEO of M&F Bank, Jim Sills, and you can listen to that conversation on our podcast, the FinRec Pod. And they have had 108 straight years of profitability. It's the second oldest Black-owned bank in the country. And so together, North Carolina Mutual and Mechanics and Farmers really were, leading the way in terms of offering financial services to African Americans in this country. I mean, they were two of the most prominent institutions, and leaders of those two companies were not just business professionals, but they were civil rights icons. You look at someone like John Harvey Wheeler, and we had another event because courtesy of you, I'm giving you props, Rochelle. Your tentacles run deep at our center, certainly, and I know at the law school too. Um, so I'm going to miss you dearly.
I'm not gonna be
But
too
any
far away. You'll be
I
able
know. Well, yeah, that's right. That's right.
to.
Um, but anyway, so the former president of M&F Bank, John Harvey Wheeler, was appointed to President Johnson's Equal Opportunity Commission, and was a real leader in the civil rights movement. Um, so that provided a vibrancy to this community, and just like other Black Wall Streets provided a vibrancy to their communities, and they really helped provide a path to the middle and upper classes for African Americans who simply just could not get access to affordable financial services from the traditional firms that were only willing to serve white clients. So it's a fascinating history. I mean, I always say, like, we go by the Global Financial Market Center, but that said, we can't ignore the history of finance and what's going on in finance in our backyard too. So we are global, but we're always going to remember where we came from and where we are, and highlight those stories. So we hosted a conversation about John Harvey Wheeler, who I mentioned, from a historian that you connected us with. Brandon Winford is his name. He's a professor of African American history at the University of Tennessee in Knoxville. And he came and he spoke about his new book, a biography of John Harvey Wheeler. It's a great book, highly recommended. You can watch a recording of that talk that he gave at Duke Law on our website. So I encourage everyone to check that out.
Absolutely. And so I think, and I think we probably had this conversation a few times, but, going back historically, Black people and money have always been an interesting combination, right? Because we didn't trust the banks, we put it underneath our mattresses, or, in our clothing or something, it was that thing. So as we are moving more away from the traditional means, so, you can get a loan on your phone, you can, get a credit, whatever it is, you don't need to go to a bank to do something anymore. As we move more in that direction, what does this mean for people who have been underbanked or unbanked, or have high instances of poverty? What exactly does this new wave of technology and innovation and resources mean for those communities that are at risk?
Well, that remains to be seen, to be honest with you, Rochelle. I mean, so on a certain level, we all have, most people, even, poor people, have a smartphone. I know there are a lot who don't, but the penetration for the smartphones is quite high in this country, and so in certain respects, it democratizes access to financial services, right? I mean, it doesn't require you to, go to a physical branch, and sometimes when you speak to people, they can use, jargon that you don't quite follow, and maybe you're too embarrassed if you don't understand everything. And I think that's, one of the points that Jim Sills from M&F Bank raised when he spoke to us is, a lot of people just, they're uncomfortable because they don't know a lot. And so, the benefit of going to a Black-owned institution with, Black tellers is that, they feel like they can trust these people, right? And they feel comfortable, and they can ask questions that maybe they're afraid to ask if they went to someplace else, like a Citibank or something like that. And so, by and large, these new technologies, though, are pretty user-friendly too, and so I think that has the potential to promote access to low cost financial services, but you still have to know how to find it that is out there. And so I think there's always going to be a role for financial coaching, financial counseling, and that is hard to replicate online, the digital platform. I mean, that generally requires a personal connection. And so there's always going to be a role for local bank branches, and then nonprofits that are doing a lot of the financial counseling, and in some cases when you get a loan, they'll do counseling in terms of that. So it remains to be seen, but I think I'm optimistic that it will that it will help. But of course, I know you've talked about this in other sessions here. A lot of this is just algorithms, right? Sort of doing the underwriting and doing the process, and we can't just assume that those algorithms are free of bias or result in unbiased outcomes. So I think that's something that we also have to be on the lookout for as well.
Yeah, I think you're absolutely right. And I think the algorithm piece introduces a whole nother level of complexity. You've got all the guidelines and regulations that the banking institution allows, and then you've got this kind of unharnessed things with algorithm and blockchain and machine learning and all those kind of things kind of coming together. And I recently wrote a paper about zip codes, right? So the algorithm says if you're in a high risk zip code, your insurance is going to be higher, or your rates are going to be, whatever, it's going to be higher. And the problem with that is that we are not always factoring all the pieces and parts. And then you add gentrification to that, you've got a whole bunch of mess in a space, So
that's right.
I really would like to see how that's going to turn out for us all in the long run. So we have a few minutes left, so I'm going to leave the rest of the time to you, to talk about whatever you want to talk about. I know I've asked you a few questions, but I know how smart you are and how well versed you are in this area. So I'm sure you have some insights you want to share that I have not covered. So please.
Oh man, Rochelle, I didn't realize you were going to put me on the spot like this.
Absolutely. I can't let you get by with that. You're too smart for that. I've got to pick that brain of yours. Tell us what we need to do. How do these things work? So please.
Oh, how do these things work? Man, I don't really know how to answer that, Rochelle. I mean,
so how about if I rephrase it? Where do you see us going? What do you see happening in the next 5, 10, 15, 20 years? Where do you see financial markets and FinTech and banking and technology going in the next few years?
Yeah, so that's a good question. I mean, a lot of of course, it depends on a lot of different things, but I go back to my earlier point about how kind of when FinTech first emerged in the aftermath of the financial crisis, it started off as we were going to disrupt banking, right? And then it was like, okay, this is pretty hard actually, so we'll partner with the banking sector. And now the third phase of that is what some people are calling big tech banking. So this is large technology firms. So think of your Googles, your Amazons, your Apples, offering financial services. And on the surface, this makes perfect sense. Google, they know more about you than your bank does. And same with Amazon. And so if you're a third-party seller on Amazon, they can see all your sales, they can see your margins, they can see everything. So why shouldn't they be able to underwrite a loan to you, right? They know your credit worthiness better than anyone. And so you're starting to see that happen, where big tech firms are sort of inching their way into the financial services space, starting off in payments. And payments is easier in a lot of regards. I mean, one is it's less heavily regulated. So you see things like Apple Pay, right? There's a Google Pay, Samsung Pay. We all know these things by now. And then, in some cases they are offering lending. So Amazon does have a limited lending program. Apple is partnered with Goldman Sachs. There's an Apple credit card now. But I think that the trend, if left unchecked, is for there to be a greater provision of financial services by these large tech firms. And the policy question then becomes, is this a good thing? Do we want this? Yesterday there was a hearing. I'm sure you're aware of the largest tech firms, the CEOs, and they received some pretty critical questions. There's a lot of concerns around these firms are already too big. They know too much about us. They're, in the case of social media platforms, they're, being used to undermine our democracy and stoke divisions among us. And then with Amazon, it's they're hurting small businesses and undercutting the people who sell on their platform and whatnot. So, so if that's your concern, then you're probably not too thrilled about this idea that they're going to start offering financial services. But by and large, people like Amazon. They might have concerns about them, but it's not stopping them from using Amazon.
Absolutely, especially with this pandemic.
Yeah, exactly. And so, I taught a FinTech sort of seminar when the pandemic first started, just for students who wanted to learn about it. And we've never been more reliant on these large tech firms, right? And that's clearly reflected in their stock price and how it's performed since the pandemic.
Absolutely.
So I kind of asked students, okay, have your views on these companies changed since the pandemic started, and are you willing to enter? And what do you think then about them, becoming your bank essentially, right, or offering? And you get mixed answers there. So historically in this country, there's been a separation of banking and commerce. And that doesn't exist in all countries. And so that means that we, by law, do not allow commercial companies to offer financial services And there's good reasons for that. I mean, one is just the concentration aspect. Two, there's the subsidization. So, would Amazon be willing to, lose money on providing financial services in order to get customers and scale up? And they certainly have the profits from their other, businesses to do that. And so would they undercut other firms? And so, so those are the concerns. But at the end of the day, if people like these services, and if they do promote, financial inclusion, should we be, so quick to say no? And certainly take a look at Facebook's cryptocurrency Libra. I mean, when it first came out, I mean, under the Trump administration, I'd never seen such a display of bipartisanship. Everyone was saying this was a bad, Trump was saying it was a bad idea. Maxine Waters was saying it was a bad idea. Everyone was saying it was a bad idea. But if you peel it back, is it really a bad idea? And they've modified it since. But clearly they were pitching this thing on, the unbanked and underbanked, right? And helping to solve that. And, people might not have a bank account, but they probably have a Facebook account or WhatsApp or Instagram. And if you can send money as simple as you can send a text message or a post on Facebook, then people might benefit from that, So there are all these big kind of policy questions, that are difficult to separate from, sort of the antitrust and the concentration of power questions that are going on right now. And so I think that's the next, sort of the next battlefront, if you will, in finance.
You remember a few years ago, Walmart tried to become a banking resource, and there was so much pushback to Walmart's attempt to do that they.
No, that's a great point. I mean, it's funny, like, in the 2000s, Walmart was like how, like what Amazon is now in like people's minds, like Walmart was like this behemoth that was like, crushing small businesses and all. And a lot of that is dissipated because because of the rise of the big tech firms. But yeah, I mean, so Walmart tried to obtain a charter in the state of Utah, actually, for something that's called an industrial loan company. And this is sort of this weird artifact of, and it's in my Coursera course, this weird artifact of federalism and banking law in this country. And, the uproar was quite loud, and ultimately, the FDIC put a moratorium on these types of bank charters, and so they had to back down. And but the debate, what Walmart tried to do, other firms have since tried to do, and some have successfully done it. So like Square, for instance, just got a similar charter. SoFi is trying to get an ILC charter. I think Rakuten, which is like a Japanese e-commerce platform, they're trying to get one of these ILC charters as well. So yeah, so it's kind of, Walmart has been replaced as the boogeyman by, by the fangs, if you will. But certainly, listen, it's a profitable business to be in if you can get into it.
Absolutely. And I think that also, one of the problems with this is like, so if you take the 2016 election and Facebook, there's a lot there, and so even before the election, Facebook had a lot of little dings on their reputation because they were selling. Like if you put health, like you said, my mother just had a heart attack. They capture that data and sell it to a data broker who would then, find something to do. And I think that when you think about these big companies and the power that they have, anything that's free is not free. And people need to
Yeah.
recognize that when it's free, Facebook, social media, all those things, Gmail, it's not free. That's why you can start typing an email in Gmail and type in the word Omaha. You get Omaha steaks. You get that.
Yeah.
All of this stuff there because these
Oh,
people
yeah.
are actually collecting your data and massaging it, selling it, and doing all these things. So I think that in concert with what you said, we do need some form of regulation to ensure the checks and balances.
Yeah, no, we do. And and unfortunately, our regulatory system is still kind of premised on a model of banking that is simply antiquated.
Right.
It's predicated on a branch based. I mean, I haven't been to a branch in years. And I know that's a bit of a luxury. I mean, a lot of lower income folks need to go into a branch for very good reasons. But yeah, I mean, back to the data aspect of this. Our payments data. And another reason why these firms are getting into payments is like, payments data is very valuable. And you think of well, what doesn't Facebook know about us yet? Or what doesn't Google know about us yet, or Amazon know about us yet? Well, it's what we're buying, like everything we're buying. And just think of what that data reveals about you. Like what you buy is indicative of who you are, right? And so that's incredibly valuable data, and that was one of the main concerns when Facebook announced this Libra cryptocurrency, was that essentially they would use the data from Libra and sort of merge it with their Facebook data. And of course they've repeatedly violated our data privacy and previous commitments they've made in that regard. So those were well-founded concerns, but I think we need to tread carefully, because it might be free in the traditional sense that we don't have to ante up money for it, but it's not free in terms of the information that we're providing them and how it's being used.
Absolutely. Well, Lee, thank you so much for this chat. I really appreciate this. I will send you a link to this video so you can review it and let me know if I can upload it. And I know I owe you a couple of things. I haven't forgot about it, but I've been a little bit stressed out recently, but it's still on my plate to do so. And I will be in touch about those other things probably sometime next week. But I will send you a link sometime today and you can let me know if I can upload this.
All right, that sounds good, Rochelle. Thanks for having me. Hopefully I can see you in person in the not too distant future.
When we're on the other side of this pandemic, or
on the other side.
Yeah, we can inject ourselves with Clorox or something, maybe by then.
I heard, yeah, or UV light. I heard that might work too.
Yeah, exactly. But last time I talked to your wife, I promised her some blueberry sandwich.
Oh, yeah.
I think I'm going to send her the recipe for it so she can make it herself. So absolutely.
There we go.
Thank you so much. I appreciate this. Be well and stay in touch.
Okay, take care, Rochelle.
Bye.